Thanks for tuning in to this week's Provider Spotlight episode. This is part 2 of my discussion with Rich Shelden, CRNA. This time, we focus more on the ins and outs of cryptocurrency. If you'd like to learn more about Rich and his journey, make sure you listen to part 1, which is episode 55. Now, on with the show. Welcome to the Plan B CRNA podcast. I'm your host, Bobby Jones, and I'm so excited that you're here. The Plan B CRNA podcast is the only show made specifically for nurse anesthetists who are exploring options outside of their traditional career paths. This is the place to expand your mind and your goals as we uncover new ways to produce side income together. Join me for some honest, unscripted discussions with other CRNAs who are transforming their financial lives. This episode is brought to you by On-Call Capital. On-Call Capital is dedicated to educating CRNAs and other healthcare providers about investing outside of the traditional stock market. On-Call Capital also provides opportunities for you, yes, you, to create passive income and generational wealth while also lowering your taxable income through investments in the apartment and alternative investment spaces. If you haven't hit subscribe yet, make sure you do that right now so that you don't miss an episode. Thanks so much for joining me today, and now on with the show.
Getting back to Bitcoin, more little Bitcoin facts. There are only 21 million Bitcoin that will ever be. When Satoshi Nakamoto, who is the creator or team of creators of Bitcoin, they're an anonymous creator. Nobody knows who that is. Nobody knows if they're still alive. Back in 2009, they developed Bitcoin and kind of released it out to the world. Making it the most decentralized cryptocurrency that there is, meaning there's no team, there's no CEO, there's no single point of failure. The Bitcoin network is kept strong and protected by a series of miners who are all over the world. And when people talk about mining Bitcoin, what they're doing is these miners, the big miners have these huge server farms. And what they're doing is they are verifying transactions, all the time they're verifying transactions that person A wants to send X amount of Bitcoin to person B. These servers make sure that person A's Bitcoin gets to person B, that it was only spent one time. There's no double spends. They verify that person B gets it. And as a reward for performing that duty to keep the blockchain Bitcoin network secure, those miners receive a reward, and it's a little bit of Bitcoin. And the reward for Bitcoin, every 4 years, it gets cut in half. So originally, every 10 minutes, a Bitcoin reward of 50 Bitcoin would go out to all these miners. And that's a lot of Bitcoin when you think about how expensive the value of Bitcoin is now. Well, back then it wasn't near that. It was fractions of what it is now. So after that 4 years, then 25 Bitcoin were released every 10 minutes to all those miners that are verifying all those transactions. If your machine is the one that verifies that transaction, it gets rewarded with that bit of Bitcoin. And then another 4 years, 12.5 Bitcoin, 6.25 Bitcoin. So every 4 years, the amount of Bitcoin that these miners get, that becomes the Bitcoin that is available to be bought and sold, because the miners, they have upkeep, they have electrical costs, they have, air conditioning costs. They've got to, a lot of times they're selling a lot of the Bitcoin to stay in business. They're making a profit or they wouldn't be doing it. But they're also, the stuff they sell goes out into the market to be bought and sold. So every 4 years, this halving event, as it's called, where the Bitcoin reward gets cut in half, the amount of available Bitcoin that's out there for you and me and institutions or whoever wants to buy, that gets cut in half. So there is a continual scarcity that is built into being able to find and purchase Bitcoin.
So is that part of the cyclical nature of this? Is that when things go low, then the dynamic changes and maybe there's not as much Bitcoin being mined or whatever. And that creates more demand, which then drives the price up, bringing more people into mine again. Or am I having that wrong? I could be wrong.
No, you're right about that. It is the Bitcoin halving event which drives the 4-year cycle. And I recommend everybody look into, you can YouTube the Bitcoin 4-year cycle and find out what it's about, because the Bitcoin price is, like I told you, the value is somewhat predictable. It's not random. When you first look at it, it might seem that way, but it is by and large predictable on what the cycle is going to do, because we know exactly. I mean, the last halving event took place in April of last year, and certain things happen. You can look at the charts and see history doesn't repeat itself, but they say it often rhymes. Well, that's very much true with Bitcoin, the halving event in the 4-year cycle. And the 4-year cycle is what drives these bull markets, and then, consequently the bear markets also. So kind of the main idea, and I'm not doing any of this. I want everybody to know I did not figure this out. I'm not a genius. I'm not doing anything. I'm not reinventing the wheel here. I went out there and I listened to people who were successful in Bitcoin and cryptocurrency investing and just emulated what they're doing. And many of them, when this was still new, this before I even got into it, they were accumulating, and Bitcoin gets up to that $20,000 mark. And then it runs into a bear market, and then it slides back all the way down to about $3,600, within a few months, several months. And all those
scary.
people were saying, yeah, all those, especially if you bought at $20,000 and then you watch your investment go down to, $3,600. Almost universally, all the people I was watching and listening to said, the next bull market, I'm going to unload and I'm going to sell and I'm going to realize some of those profits, so that when the bear market inevitably comes again, I'll have more capital there to pick up a lot more Bitcoin. I can double my Bitcoin, or maybe I can triple my Bitcoin. And you're talking about a scarce asset. We talked about only 21 million that would ever be mined. And that mining, that 4-year cycle in mining goes out for the next 100 years. It's already set in stone how many Bitcoin are going to be, able to be mined. And you can imagine as we get to, 6.25, 12 and a half, 6.25, before long, there's going to be a supply shock for Bitcoin. And I believe that the Bitcoin price will continue to appreciate, such that it's going to be difficult. It already is difficult to own one full Bitcoin. A lot of people can't own one full Bitcoin right now. And I think that is only going to be the case as time goes on. I think it will be a status symbol at some point, probably, if you're able to own one Bitcoin. And you throw into that mix the fact that there are an estimated probably 3 to 4 million Bitcoin right now that are lost forever. When Bitcoin was brand new and worth fractions of a penny or pennies, nobody knew what was going to become of it, and a lot of people got rid of their old laptops and didn't keep their information, and they're scrambling to find it now. But that money, that Bitcoin, is lost forever. Same thing happens to you if you decide to take custody of your coins, which I do recommend. It requires some responsibility. You've got to keep up with your private keys, which is basically your combination to your coins on the blockchain. If you lose them or forget them or lose them, you will lose everything you've got. So if you decide to do that, which like I say, I recommend that, because you'll hear this phrase also, not your keys, not your crypto. You can let Coinbase or Kraken or one of these other, 100 other wallet companies hold on to your coins for you. But when they hold the private keys, is it really your Bitcoin or your crypto?
Now I want to pivot real quick, because we've got we've talked a lot about Bitcoin in particular.
Yes.
Let's talk about some of the altcoins that are out there. And,
All
these
right.
are alternative coins to Bitcoin. Obviously, like Ethereum and Litecoin are two of the bigger, more well-known ones. How are those different? Do they have finite numbers as well? Do they have cycles like this as well? Or how is that starting to take shape?
All right. So right now, there are probably, I don't know the total number of altcoins there are out there, but there are, it's probably like 8 or 9,000 that are
Yeah.
out there.
Yeah.
And the great majority of those are pump and dump schemes and will go to zero. Probably 95, 97% of those will go to zero over time. So it's important to do research and find out what you're buying when you decide, or if you decide to get into crypto. Something like Ethereum, and there are several other, it's a smart contract platform, and Ethereum it is massive, and it's going to be massive for years. There, and I'm not an expert on Ethereum, I'm not an expert on Bitcoin, but there's no finite limit of Ethereum that can be mined. However, Ethereum has just undergone an EIP, an Ethereum Improvement Proposal 1559, I believe it's called, to where they are going to begin with every single Ethereum transaction that takes place, they're going to burn some Ethereum. And already millions of, this just took place in the last few weeks, and already millions of dollars of Ethereum have been burned. So if Ethereum is actually now deflationary, it may even become more deflationary than Bitcoin. So it too now has some scarcity built into it. But a way to think about Ethereum is, you could say that it is going to be the software that the new internet will run on. And there are a lot of competitors: Cardano, Polkadot, Solana, Elrond. There are a lot of competitors there, and there's room for competitors now. I think all those projects I just mentioned will be successful and will appreciate tremendously. But it's hard to even grasp all the things that Ethereum is involved in. Ethereum is the basis for most of the decentralized finance that's going on. People, you probably have friends that they talk about Ethereum staking and staking rewards and lending. In this day and age, you don't even have to have a bank anymore. With Bitcoin and with Ethereum, with DeFi, or decentralized finance, there are just so many protocols where once you have your Ethereum, you can loan that out, you can lend it out, you can put it in places to earn interest. Ethereum is also the backbone right now of a ton of gaming and NFTs, non-fungible tokens, which I'm not an expert
That's
on
a
either.
whole other, that could be a whole other podcast, I think.
It is. It's a whole other can of worms. But you can think of those smart contract platforms as essentially the software of the new internet that is being developed, and the software of the new economy.
Now, speaking of a new economy, with new economies, there are typically new regulations. So what are you seeing as far as the regulation space? Obviously, different countries are maybe moving in different directions. What are you seeing, and how can that affect what's going on in the cryptocurrency space?
Yeah, regulation. In the beginning, when I first learned about Bitcoin and read the Bitcoin standard, I was against any type of regulation out there. I thought, okay, the banks, they've had their shot. They've ruined this economy. Politics, the politicians have ruined the economy. They've inflated the currency. It's a matter of time before we pay the piper, and we have to deal with all that. So I was like, Bitcoin was a great answer, and cryptocurrency in general. But after seeing a number of hacks and a number of the way that whales, who are people who own tons of Bitcoin and cryptocurrency, can push the market around, and seeing these exit scams where these basically shysters get people to, invest their money with them and then they take off. I feel that there is the need for some regulation now, because I feel without some common sense regulation, all these insurance companies and really big money will not want to come into this space if they think that their investors' retirement funds could be made off with, could disappear. So I have kind of changed my tune on that. US regulation, they're trying to figure it out right now. Everybody who's in this space knows that recently with the infrastructure bill that was passed, there was some terrible legislation that was in there, and there were some specific amendments that would have made it much better, or even taken that wording out, that amendment, the cryptocurrency part of it out entirely. But our politicians and their infinite wisdom could not get it together, many of which don't even know what cryptocurrency or Bitcoin is.
Yeah, I heard there was more political gamesmanship than anything with regards to that, unfortunately.
And somebody didn't get what they wanted, so the bill went with the original terrible language, and it went to the House. And there's a chance to fix it there, and there's a chance to fix it, even amend it, even after that. And I think cooler heads will prevail, and they'll get something right. But it's interesting. We don't know. We're not sure what regulation is going to look like. I believe in some common sense regulation, but I certainly don't want it to be over-regulated. I believe that freedom is a good thing, and cryptocurrency kind of equals freedom to me.
Mm-hmm.
You don't need a bank. You're your own bank. You don't need any bank. You don't need any financial institution. So that appealed to me, and I don't trust. The US, other countries are working on central bank digital currencies. Everybody's probably heard of that also. And unfortunately, when that comes out, that will just be another form of digital fiat currency, meaning it won't be backed on anything, and they will have the ability to inflate that just as they have the paper dollar. I guess now's a good time I have a little visual aid. I did keep a few things from my coin and currency collecting history, but this right here, I'm going to try to hold it up to where you guys can see it. I don't know if you can read that.
$100 trillion from the Reserve Bank of Zimbabwe.
That's right. And everybody has probably heard about Zimbabwe and the problems with their hyperinflation. Well, this is an example of how bad it can get when you have to print a $100 trillion bill, which they did back in 2008, 2009, to keep people from having to bring wheelbarrows of currency to the store just to buy food. You're way past being in trouble. So I keep this as a little constant reminder of why I'm involved in Bitcoin and cryptocurrency, because we tend to be, it looks like we're doing the same thing, although with this modern monetary theory that they're telling us now, these economists, we can just print however much we want as long as we control our own sovereign currency. I don't know how we're going to be able to do something that no other country has been able to do in the history of the world. So I'm mistrustful of that, which is another reason why I'm into Bitcoin.
Well, and let's talk about some of the returns that you've personally had, because this is something that you talk about it as an inflation hedge, somewhat similar to the way people like to think about precious metals investing and things like that. Where do you mentioned earlier that this is better than gold. Why do you say that? Is it because of the overall trajectory being just more positive? Is it because of the predictability? Where's your head at on that?
All right. Well, for one, there's a number of characteristics that Bitcoin has that make it more desirable than precious metals to me, because I come from I'm a guy who was invested in precious metals. We talked about some of those things earlier. Bitcoin, one Bitcoin is made up or consists of 100 million Satoshis. So there are 100 million Satoshis or sats in one Bitcoin. So that makes Bitcoin highly divisible, right? If you wanted to get in there and say, I want to spend 0.00000, 0256 Bitcoin on a cup of coffee, you can do that. You can get it down to 8 decimal points. I can't think of anything that's more divisible than that. We talked about how you could send it around the world in a matter of minutes, compared to if you wanted to use the SWIFT system, which is currently the system that is in use now. It would probably take you 3 to 5 days to get money from point A to point B. You would go through a number of middlemen, probably 4 or 5, and you'd be paying fees all along the way. It may cost you 4 or 5%. There are people who send Bitcoin around the world, exchanges, et cetera. I mean, sometimes worth hundreds of millions of dollars, and the fees are usually less than like $20. Sometimes they're only cents, sometimes it's less than $1. So that's hard to beat. If you wanted to move gold or silver around like that, they're super heavy, right?
Yeah,
yeah. And you'd have to go through, not only is there the weight thing, but you'd have to go through middlemen and exchanges and depositories and things like that.
There's only so much you can divide it as well.
That's right. It's not easy to sit there and chop up. It can be done, but who wants to do that? And they make fractional bits of gold, but still there's nothing that compares to the ease and speed of Bitcoin. The book has a list of, there's a chart out there also. You can Google qualities of Bitcoin. And it'll tell you how it'll compare it actually to gold, and you can see how it's better. One of the only things, and in fact, if I'm remembering part of that chart, I wish I could remember more of it. One of the things that makes gold better than Bitcoin is that it's been around longer, so it may be a little more trusted. But
yeah, well,
that will change too.
I'm sure it will. So, and then getting back, you mentioned starting buying some Bitcoin when it was about at $12,000. I don't even know what the price is today. It's kind of,
as a matter of fact, early this morning, it popped back over $50,000 for Bitcoin.
Okay.
It was as high as 64. The all-time high was back in April or May, and it was just under $65,000. So we had a correction, a mid-cycle, what I believe is a mid-cycle correction. I still feel that we are in a bull market and that Bitcoin will go to well over $100,000 for Bitcoin, either by the end of this year or sometime next year, maybe Q1, maybe Q2 of next year. So it's continued to appreciate. We're in that bull cycle now. I believe. Some people don't believe that. I believe that we are in a bull cycle. And I started taking bites at 12,000, and when it came all the way down, I was dollar cost average buying as it came down to its bottom of $3,700 for Bitcoin. And that's when I was selling everything I had that wasn't nailed down to go into Bitcoin and cryptocurrency. And I still continue to dollar cost average when there are corrections, or when when I have extra money that I feel that the price is right. And I've also expanded into altcoins too, Ethereum and several others. I hold many altcoins. Bitcoin and Ethereum and the others that we talked about, they are blue chip stocks, right? Their market caps are already massive, and they are safe because they have been tried and tested, and they're going to be here for another 100 years. They'll be here. So that's a good place. That's why they're a good store of value. Now, if you want to leapfrog and try to get more gains, altcoins are a market where people invest in altcoins. They have much smaller market caps, many of them, and it's much easier for them to double, triple, 10 times, 20 times, 50 times their price than it would be for Bitcoin to do the same thing. It would be nearly impossible for Bitcoin to do a 10x, in the next month. But in a bull market, altcoins can do a 10x in a matter of days or weeks or months. They can also 10x downward. So
Yeah.
you've got to be careful and, learn when to buy, and they're risky. There's a risk to reward ratio there. And if you're willing to take the risk, I tend to do some research, and I will buy altcoins ultimately with the goal of when they appreciate, selling them and then taking that profit to buy more Bitcoin or some of those other blue chip like Ethereum,
Gotcha.
some of the other smart contracts, Polkadot, Cardano, to buy some more of those when we roll back into a bear market, which I believe will happen again. I believe the 4-year cycle will continue for a little while anyway.
Now, do you still hold individual stocks and in a portfolio, or are you, all in on crypto right now? How does that look for you personally? And what are your thoughts moving forward with that?
I hold very few stocks now. I'd say my portfolio is probably 80% crypto, 15% real estate, and 5% traditional equities.
Wow.
Yeah, I've almost completely gotten out of, because the risk to reward ratio was just there. Like I said, I wanted to try and leapfrog, to try and get ahead and catch up. And once I learned that Bitcoin and cryptocurrencies were safe and were going to be here, they weren't going to go away. I pretty much went all in there. And I know that's not diversifying very much. It's not what we're typically told to do, but with the new asset class and asymmetric gains are possible with and that's what I want people to get here. If nothing else, you have to look at the opportunity that's here. It's still early for cryptocurrencies, even though Bitcoin was designed in 2009, and Ethereum and all these, in the last several years ago. We're still early here, and people, if they still want to get involved, I recommend read up, study dollar cost average, or possibly wait for a bearish time, which will come again. But it's the equivalent of, like I say, it's a whole new asset class. It's like I keep comparing it to gold, but it's like gold was just discovered, or oil was struck, and we need it to run everything. It's like cryptocurrency now is like buying Apple stock, getting in on the IPO of Apple stock. If you just get in, and over time, the people who have done very well have simply held. I got in and I wanted to get involved with some leverage trading. And I don't recommend leverage trading to anyone but professionals who do that. Because if you're not a professional and you get into leverage trading, which is where you get to borrow money and you can bet, 20, I want to get 20 times returns, or 30 of my returns, or 50x my returns. Well, those losses are also 20, 30, and 50x. Mm-hmm. And the market is so volatile. If you don't know what you're doing, you will lose money quickly, which I did. I was part of that crew. So I learned very quickly, getting burned, that leverage trading was not for me. And I try to buy when prices are good, and I simply hold, because the market has shown that appreciation takes place if you simply just buy and hold.
Well, Rich, I mean, you clearly have such a wealth of knowledge about this space. And, I still feel like we're just reaching the surface. I didn't even get to mention Dogecoin. We haven't even gotten to any of that kind of stuff, but I did want to, give you a chance to kind of go over some of the resources that you would recommend for people who are looking to educate themselves. You mentioned the book. Who are some of the YouTube folks that you follow?
All right. So I follow a number of YouTubers. Lark Davis is one that I follow. I watch his program. He puts out one, sometimes two videos a day. And it's essentially, he's a little bit of everything. He talks about a little bit about news, a little bit about new projects, old projects. He does a little bit of, a little bit of charting, a little technical analysis. For technical analysis specifically, and for charting, I watch, the channel's called The Moon. The guy's name is Carl. He's a guy who worked in a supermarket. He's a young guy. He was working in a supermarket, found out about Bitcoin and invested early, and he is a multimillionaire now. And all he does is he's got a YouTube channel where he makes $1 bazillion too, I'm sure.
Yeah.
But he is great at, I watch him for a lot of technical analysis to try and see. I'm a novice at technical analysis. I've learned enough about it to know that it's real and it's a real deal, and that you can see many times trends, but I by no means am an expert in it. But I watch these guys who are experts, and I learn a lot from them. I watch a channel called Chico Crypto. He talks a lot about altcoins and new projects that are out there that he thinks may have promise. Altcoin Daily, so two twin brothers do that show out of California, and it's mainly a news. It talks about the cryptocurrencies that are out there, but everything that's happening in crypto. I also watch Data Dash with Nicholas Merton. He'll talk about traditional markets when Bitcoin is not typically in a bull cycle, but he's a great investor. He's got hundreds of thousands of subscribers, and he's very knowledgeable about the markets also. So those, if I had to recommend a handful of YouTubers, that would be the group right there.
Awesome, man. Well, I typed all those out. I'm going to put them in the show notes so people can link to those. Man, this has been fantastic. I do want to give you a chance. Like, I know you're on the Facebook page for CRNAs and Bitcoin investors. And I'll have a link to that in the show notes. But, if you want to give people a chance to get a hold of you, how can they do that?
This is going to go out to that group. I suppose Facebook is the best way to get a hold of me. That group alone, the CRNA, NP, Bitcoin and cryptocurrency group. I'm not always the fastest to reply if people message. And every once in a while I get some shifty looking messages and I won't respond to anybody for a while. So sorry if I know there's a few of you that have probably responded to me on that site that I have never got back to. I will. But you just have to be careful and watch yourself out there, as everybody knows on Facebook.
Yeah, no kidding. Well, I'll put that out there, and man, it's been awesome having you. I've really enjoyed this conversation, learned so much.
Me too, man. It's been good.
Real quickly, after I stopped recording, Rich and I continued talking, and one of the things he expounded upon was the need to protect your cryptocurrency investments. As he mentioned in our discussion, you have to make sure that you don't lose your passwords or keys, and having several safe copies of those in different locations is important. In addition, you may have heard about some of the Coinbase hacks going on right now and accounts being drained. There are some ways that you can protect yourself from that by using a hardware wallet such as Ledger to hold your coins, or a software wallet such as MetaMask. I've got links to those, plus all of the educational resources that Rich listed off in the show notes. Please, please, please protect your investments by educating yourself before you go out there. And I will say, this is an episode that I'm going to have to listen to a few more times. Rich packed in so much information here. He's sought out a ton of education about the crypto space, and he's currently deploying that knowledge to benefit his family. My key takeaway is that he's actually utilizing similar strategies that you see in traditional stock market investing to great success in cryptocurrency. He uses dollar cost averaging to ladder himself into positions. He puts the majority of his money into the big coins like Bitcoin, Ethereum, and the like. And he takes small flyers on a number of riskier altcoins in the hope that some of them do well. He then takes those profits and plows them back into his big coin holdings. But the general idea is a buy and hold strategy, which is straight out of Stock Investing 101. When you have conviction, you don't panic. You HODL, or hold on for dear life through the ups and downs. I hope you got as much out of this discussion as I did. That's going to do it for this week's show. I'm your host, Bobby Jones, and I'll see you on the next episode. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.